Bitmain to burn 12% of their Bitcoin Cash transaction fees and call upon others to do the same. VeChain announces their multi-party payment protocol. JP Morgan pilots its blockchain-based debt issuance. The European Union votes for closer regulation of cryptocurrencies. And much like Venezuela, Crimea intends to use cryptocurrency to circumvent sanctions. Dilbert makes fun of corporate ignorance towards blockchain. And Bitcoin set for its first bi-weekly gain of 2018. We've got all your headlines mixed with some daily market analysis. I'm Elio Trades, and your FUD TV daily update starts now. That's right, just diving here in the total market caps, we can see that Bitcoin is up again, another 3%. Actually, we have a few coins in the top 10 clocking losses, with Ripple as the biggest coin clocking a loss, about 2% here, but that's after an amazing rally from Ripple. Yeah, we have here at 47 cents here. If you go back to the sort of the beginning of April here, we can see that all the way up until April the 11th even, right? You had a chance to buy Ripple for under 50 cents, and now it's over 85. It's almost doubled from there, and it's looking very strong on heading back to its multi-dollar price point here. Very strong stuff for Ripple, obviously the third biggest cryptocurrency. Always good to see big gains out of the top 10. It really shows that we're going to add more market cap in general. Bitcoin Cash, of course, doing well. It's been having a great week as well. EOS with a slight loss here. Unfortunately, some of the rest of the top 10 have clocked some small losses, but of course it's Saturday, which is a weekday for the market. Let's look at the biggest gainers in the top 100. We can see that Game.com is absolutely smurfing it right now. Let's check out Game.com. The only really big thing that we can see that caused this pump from Game.com is that they announced that they're going to be running for a Tron super representative position, and of course Tron's been making a lot of movements on getting their ecosystem up and running. So that could definitely be the reason why Game.com is pumping, definitely the most likely reason, but at the same time, Game.com is a promising project and part of the Tron ecosystem, so we can assume that a lot of these projects like Gifto, Baofeng, Odyssey Protocol, a lot of these coins are going to start pumping in anticipation of this Tron ecosystem being sort of rounded out. And in our lead news out of the day, we have word that Bitmain is going to be burning 12% of their Bitcoin Cash transaction fees. Now, we all know that Bitmain is one of the largest producers of ASIC mining equipment, and that has allowed them to sort of prop up this new Bitcoin Cash fork with a ton of miners and a ton of mining power. That would mean that they have the ability to collect a ton of transaction fees as well for upholding the network. And in doing so, they were sort of saying, okay, well, there's not really any kind of coin burn built into Bitcoin Cash, but to sort of make this more of a sexy coin and make it more valuable, I guess, they're going to say, okay, we have enough power, we have enough money, we want to make this coin more powerful, more significant, and the way to do that is to bring more value. So they're trying to create a trend of Bitcoin miners essentially burning their profits. But then again, that kind of goes against the idea here of why people would sort of be incentivized to mine, is because there's a financial incentive for paying for upholding and creating and maintaining this equipment. So it's sort of a catch-22 here, in that they do obviously want something of value to come to the network by creating this coin burn, but at the same time, they're kind of asking for something that's difficult to pull off unless you're in a position much like Bitmain, where you really just don't care about these mining fees and you have so much cash that you just don't care. Definitely a clear attempt to bring more value to the Bitcoin Cash project, which of course in the wake of the release of Lightning Network is starting to lose its footing a little bit, because obviously Bitcoin Cash advertised itself as the sort of cash alternative to Bitcoin because it's faster, less transaction fees, etc. Of course, the argument against that would be that it's just a wider freeway, and with more people it would get congested as well. Now that we're seeing with Lightning pretty much up and running and functional in its beta state, if Bitcoin Cash wants to stay in the top 5, they're absolutely going to have to add more value, and it might have to come from actors like Jihan Wu and Bitmain taking a little bit of a profit cut here to add more value to the entire network. We'll definitely see how this plays out, but it's an interesting story to say the least. And we've just got word that VeChain has announced their MPP, or multi-party payment protocol, which is absolutely significant, as they'll explain how this is a critical barrier that they're removing for widespread adoption. So the crux of the idea here is that they want VeChain to be very useful to everyone in the world, having nothing to do with whether you really intimately understand and are familiar with the technology of blockchain and cryptocurrencies or not. They want it to be that this value of the VeChain blockchain is delivered to the end user no matter what. And so they're sort of coming up with this idea of, okay, let's say there's a service that runs on our blockchain, but then it gets transferred to someone who's not really familiar with the blockchain, not connected with this technological ecosystem, but they're holding a luxury handbag that has one of our chips in it that's tracking that handbag's provenance and location and authenticity. That would require for this non-token holder to essentially pay transaction fees or whatever, and essentially what VeChain is saying is that this is too cumbersome and this is going to prevent widespread adoption. So they're coming up with something called a multi-party payment protocol. They'll allow for other parties within the supply chain to pay for these services and essentially allow for the blockchain services to still be carried out. So even if a non-token holder was going to move data to another non-token holder, well, that data could still be processed and the blockchain could still be used, even if those two people are not really aware that they're moving a VeChain sort of blockchain piece of technology or digital asset. It's sort of the concept of the end user doesn't need to know how to build a watch, they just need to know how to be able to read the time. And JP Morgan is testing the waters for blockchain-fueled debt issuance. The biggest US bank by assets, JP Morgan, joins forces with the National Bank of Canada, among others, to develop an application based on its Quorum technology for its debt issuance on the blockchain, corporate bonds, treasury bonds, etc. The test involved the issuance of $150 million of a one-year floating rate Yankee CD alongside a simulation of the issuance on the blockchain. According to the announcement, JP Morgan acted as the sole dealer. This is not the first example of debt issuance on the blockchain, but it certainly will not be the last, as we're seeing more and more big banks turning to this technology for increasingly important services. As an example of how much cost can be slashed, a deal that once cost 30,000 Great British pounds to execute only cost 50 pounds with the new system. That's insane. Banks simply can't turn their back on the value and the efficiency created by blockchain. This is going to completely revolutionize their business, and stories like this are the exact fuel for the fire that they need to just ditch the old system and come into the new world. And it turns out that Venezuela is not the only country looking to cryptocurrency to circumvent international sanctions. That's right, Crimea has joined this conversation, and they're looking to raise their own crypto fund as they see this as a primary way to bring money into the country. However, unlike Venezuela, Crimean leadership is being pretty straightforward about their plan to circumvent sanctions. We're discussing the schemes to circumvent sanctions. One way is the creation of a cryptocurrency investment fund in Crimea where we can accumulate cryptocurrency resources, exchange them in cash, and use them to implement certain investment projects in Crimean land. Cryptocurrency is a way to avoid settlements in US dollars and euros from currency restrictions. Other noteworthy Bitcoin bulls and leading cryptocurrency investors want to turn Crimea into a leading cryptocurrency hub with forward-looking regulations. This is just one example of another small nation stepping up and trying to use cryptocurrency as a way to reinvent itself and gain a new lease on their economic life here. But this all comes as Europe eyes even stricter regulations for crypto. An EU representative explained criminals use anonymity to launder their illicit proceeds or finance terrorism. This legislation helps address the threats of our citizens and the financial sector by allowing greater access to information about the people behind firms by tightening rules regulating virtual currencies and anonymous prepaid cards. Obviously, this is the story we keep hearing over and over again, is that we want cryptocurrency innovations, but we definitely don't want them to be used essentially for money laundering and terrorism, human trafficking, all of these horrible things that do exist in the world, and that we can't deny the existence of these negative actors, but we also can't deny the existence of these positive actors. So we have to find a middle ground here where we're doing our best to stop negatives in the world, but doing them sensibly by not cutting off and sort of stamping out innovation. The main takeaway is that there has to be KYC requirements enforced on all exchanges. And we can assume that this will trickle down to the Binance exchange as well, which is now located in Malta, which is part of the EU. And to end on a slightly lighter note, it turns out that Dilbert comic strip is actually being run by someone who's a blockchain enthusiast and actually has a blockchain project that they're launching. And for that reason, there have been a few mentions of blockchain in Dilbert comic strips. They're pretty much making fun of just corporate people who don't understand blockchain or just want to use it for stupid purposes. What I find very interesting about this is that the creator is actually the co-founder and chief strategy officer of WenHub, which is a startup that creates time visualization projects, including one that facilitates blockchain-enabled video interfacing between subject matter experts and consumers. This blockchain revolution is touching everybody in different spheres of culture. It's not just computer nerds. These are all kinds of people, creatives and people in pop culture, different forces in our world, both small and large, that are joining into this cryptocurrency revolution. And that's exactly what it is, a revolution. So keep your eyes out, keep your ears open, because the signs are everywhere. I know, guys, I'm so sad it's the end of the video too, but it's not the end. We can still chat. Hit me in the comments. I love reading them, I swear. If you're new to this channel, you have got to subscribe. It always sucks to say goodbye. I'm Elio Trades, and I'll see you guys very, very soon on the next episode of FUD TV.